Hey folks, this is Eric. I'm doing your stock market homework in 60 seconds or less. Typically, today I'm going to do a little bit longer one. This is the weekend, March 11th, 2023. So I'll give you a few more minutes on it. Try not to drag it out too long. We're looking at the SPY, which is an ETF, an exchange traded fund. It formerly was called SPDR, so the Standard & Poor's Depository Receipts, and it's traded on New York Stock Exchange. But it's one that I guess day traders will trade because, well, I mean, it costs a bit, but it also moves several dollars. So if you're leveraged in, then, you know, if it makes a $2 move and say you got 100 shares, that's $200. So, all right, so I'm just going to look at leading into yesterday. I'm just going to look at what you might have considered, and all, you know, this is hindsight, right? But what you might have considered going into the day, why you may or may not have made a entry for a long position for sure. All right, so first thing I'm gonna look at is this chart here. Let's see if I can open it up from this side. Maximize sale. All right, so this is the 4-hour chart. Come on, get back. Now we're on the 30-minute chart. Which one? Come on. No, we did. Okay, all right, so the 4-hour chart. Okay, so if we zoom out of the 4-hour chart, let's see, it went back that far. We're gonna stretch it back a little bit more than 10 days. Let's go back 30 days. All right, so on the 4-hour chart, 30 days back, you can see that it's still somewhat in a downtrend. So even if you drew connected dots from there, boom, it's still under the descending resistance, as well as we're talking about this day here. So that was March the 10th. All right, so it's under the 200 exponential moving average, which is a significant line, and it's under the descending resistance, which is kind of significant. It's under this significant swing high as well. So not a lot of reason to think that you should be bullish way down here. All right, not to mention if we go to the 1 day. All right, so on the 1 day, you've got, you know, potential support way down here. Way down here. So if I was to draw a price level line, okay, so you got a long ways to go before you could consider that you might be reaching some type of support. Even if you considered here, I mean, that's only really hitting one level. Maybe you could consider that it hit here once, twice, 3 times. So you might consider that's a good place there. But remember, this area here, is was it March 10th? Okay, so March 10th is here. It hasn't hit it yet. So this is March the 9th here. The stock opened right here. It opened here. So you might need to assume that it's going to continue down to reach that level. Right? Okay, so now let's go to the next chart, which is the 15-minute chart. So on the 15-minute chart, if we zoom out, you got a couple points. You can even go here to there as your descending resistance. Let's see. Let's go out a little bit more. 5 days, 20 days. So 20 days on 15-minute, on a 15-minute period. Yeah. All right. So, like I said, you could drop from there to there, which gives you at least 2 points. So here, 2, 3. Okay. And still, either way, you're under that descending resistance. Okay. So again, and on the 15-minute chart as well, you're under the 200 exponential moving average, right? So again, we're considering that this is March the 10th. This is March the 9th. even throughout March the 9th and the after hour session, we're still under the 200 exponential moving average. It came up, possibly touched that area, but then on open, it's way below it. So again, you wouldn't assume that you're in a position to take a bullish position unless you're considering this pullback, something short term, right? So it dropped down, hit that level that we had drawn previously, and it did make a short term movement up toward that 200 exponential moving average. All right, so that's 15. Let's go to the 5 minutes. All right, so on the 5 minutes, we're getting granular here. We're still below everything, right? Nothing of that has changed. That 200 exponential moving average dropped down a little bit lower because we're on the closer time frame. We do see this bottom wick down here. Nevertheless, on open, we're below the 200 exponential moving average. Not only that, but the stock didn't really try to pause when it hit the 200 exponential moving average area. It certainly made a pause down here when we're closer to this line, right? That price level. And so it made a slow move up, but even it made a pause here, resting on the 200 exponential moving average going up. But again, this 200 exponential moving average, even at this point, is still in a descending, let's see, it's in a, let's do this. That 200 exponential moving average is in a downward slope. So even though it moved above it, 200 exponential moving average is not going up. It's not going up. If it were going up, that'd be a different story. So even like here, where it's kind of moving sideways, that might be more of a likelihood that it's going to move up. However, you're still below the significant descending resistances, as well as the stock didn't really bounce on the 200 exponential moving average. So it's not respecting that line per se. It is respecting the descending resistance. Okay, I think that's all I have for you today. So go out there, do something good, be smart, make good moves, click like, link, and subscribe, and then we'll try to do these daily.